Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what are the basic things that one should learn before starting trading in the Indian stock market? Answer by Rajesh Kumar. Good question. There are many things we must know before investing in stock market. Equity trading is not a game. Once you start getting yourself prepared for it, you see that it is an extended profession where the individual needs to know a few basics and risks associated with it before starting to trade on real-time stock market. A conversation on investments in capital markets. You are old, Father William, the young man said, and your hair has become very white, and yet you incessantly invest in market. Do you think at your age, it is right? In my youth, Father William replied to his son, I feared it might injure the brain, but, now that I'm perfectly sure I have none, why, I do it again and again. There are many steps. I would like to explain some steps. Find them below. Pick source Google. Read books and surf internet. The first thing is to learn the basics of stock trading. Should have access to multiple sources of quality education, just like a bike riding. Watch business TV channels or newspapers. By doing these, we get some knowledge about stock market. Find the below books names. 1. How to Make Money in Stocks. Author, William O'Neill. 2. 1 Up on Wall St. Author, Peter Lynch. 3. Buffet, The Making of an American Capitalist. Author, Roger Lowenstein. 4. Market Wizards. Author, Jack Schwager. 2. Find a good stockbroker. The second thing is to finding the right broker. In market we have plenty of stockbrokers available. For beginners it is better to go with discount brokerage, e.g. Zerodha is the best discount broker in India, as of now, with good trading platform for starters. 3. Learn the technical analysis. Technical analysis is a forecasting stocks on the basis of historical data and to analyze the tendency of these stocks to behave similarly over a repeated time period. Traders who learn technical analysis can boost their financial status and be more confident about their decisions. Technical analysis is a skill that can be enabled with more and more practice on forecasting and having patience to get the results. 4. Observe the market behavior with no cost and no risk involved. Nowadays usage of internet is increasing in our country. Stop watching YouTube or entertainment channels. Search for the market conditions, how it fluctuating with internal and external factors. As we know, due to fall in US market, that affected on Indian markets. By analyzing the market, we get knowledge when to invest, where to invest and how to invest. 5. Risk and money management. For every trader, money management is very important. Investors cannot control the market spikes, but surely they can manage their money in every transactions they make. A good trading strategy is worthless unless you are able to manage your money well, because trader will be left with zero money to trade if he or she do not follow a proper money management techniques. One of the best technique of managing one's money is by using stop loss tool. 6. Discipline. Discipline is the key to success. The investors, those have systematic investment plans, have discipline and patience in monitoring their portfolio, have been able to generate great returns. 7. Diversified portfolio. To minimize the risk associated with the stock trading by holding a diversified stocks in their portfolio, one can diversify their portfolio in many ways, like holding stocks of companies operating in different industries, so that even if one industry is down performing, other stocks in the portfolio will not be affected. 8. Buy your first stock or practice trading. The best way to get started is to simply take the plunge and make your first trade. Don't be afraid to start small. Even 5, 10, 20 shares will serve its purpose of getting you in the market. And last, follow Warren Buffett. For the majority, trading will be losing proposition. Warren Buffett, the greatest investor of all time, recommends individual investors simply passive index instead of trying to beat the market trading on their own. So, if you want to start investing in the stock market, open an online demat and trading account with discount brokerages like Zerodha. Why Zerodha? It is a discount broker, good online trading platform, good customer support, 24/7, free on long-term investments, delivery free. For intraday or options and futures, charging 0.01% or 20 rupees per executed order, whichever is low. And mainly Varsity Tool. It is the best place to learn stock market basics, fundamentals and technical analysis. Varsity by Zerodha Markets, Trading, and Investing Simplified. For more details, follow the link. Open an online trading and demat account with Zerodha and enjoy the lowest brokerage. Thank you. Answer by Priya Singh. Invest only the surplus. If you want to take a risk in the volatile market, invest only the surplus money which you can afford to lose in the market, which will not disturb your daily living. Do not invest in the stock market by selling your existing assets, because as exciting as the prospect to earn more might be, the returns are not guaranteed. Associated risks. There are various risks associated within the stock market, out of which there are two primary points the investors have to take care and be aware of are: you may lose money. Stock prices vary often drastically for many reasons with no pre-indications, especially when the trader has not planned for long-term investments. Learn the art technical analysis. Technical analysis is a form of forecasting stocks on the basis of historical data and to analyze the tendency of these stocks to behave similarly over a repeated time period. Technical analysis works on the principle that the current market price is discounted of all the information known to all the traders or select few most active traders in a market, who has the access to the most privileged information about the market. Open your zero brokerage stock investment demat account now instantly. It involves the study of various parameters like averages, trend lines, oscillator, patterns, etc. Traders who learn technical analysis can boost their financial status and be more confident about their decisions. Technical analysis is a skill that can be enabled with more and more practice on forecasting and having patience to get the results. Discipline is key. Historically, it has been seen that even bull markets have shown some panic movements. The volatility in the market has inevitably made the investor lose their money despite the bull run in the market. However, the investor, those have systematic investment plans, have discipline and patience in monitoring their portfolio, have been able to generate great returns. Hence, it is prudent to have a disciplined investment plan. Zerodha. Online stock trading at lowest prices from India's first discount broker. Answer by Rita Roy. 1. Research about the market. Before investing your money on random stocks that you aren't even sure if they'll appreciate or depreciate their value, you should research about their trend, the market trend, and also read reports public on various websites to have in-depth knowledge about the market. 2. Know how the market works. Before investing, you must be familiar with the basic functioning of the stock market, important things such as indicators, charts, etc. To know about all these things, you may go to websites like Zerodha, Varsity. 3. Choose an online broker site. After knowing what stock to invest in, you have find the online broker. Is this good to go for a discount broker? They charge a very minimal amount of brokerage on the transactions. 4. Practice on a demo account. Once you have picked a reliable online broker site, you can now create an account with them. Most of the time, these broker sites offer the creation of a demo account which you can use to practice your trading skills and formulate trading strategies. You can have a real-life experience by investing virtual money. 5. Create your trading account. After this, you should go for a live trading account and then start investing real money. You should start with a small amount to first see the results and then gradually increase the amount. 6. Choose and buy reliable stocks. Buying stocks of companies having good potential growth is profitable. Choose companies that have a good domination on the market and are good performers too. Look at various factors such as its past prices, price trends, etc. before buying a stock. 7. Monitor the market daily. Now that you have your own stocks, you should always monitor the market and make sure they are always in a profitable favor. To be updated always helps the investor. By being fully up to date, you can make good profits by buying and selling at the correct time. 8. Consider reinvesting your profits. Trading doesn't end by buying or selling of securities just once. Consider reinvesting your profits to get more profits on it. For more details regarding investing and account opening, click here. Scan the QR code below.